Today has potentially been the craziest day in markets that we've had in an extremely long time. And it all was caused by one simple tweet by Donald Trump. Or was it? Was there underlying issues in the market that could have foreseen this giant crash as we literally had 450 billion with a B dollars wiped out in literally 7 minutes? Now, this volatility is something that is extremely new, and it is all because of one thing. There's massive amounts of liquidity in the market, and the exchange of information is faster than ever before. But this crazy tweet and Truth Social post of literally just Trump threatening to start producing cooking oil in the US has made a massive crash of $450 billion in market cap. But that doesn't stop investors. The buy the dip strategy has rarely been ever so strong. Ever since the S&P 500 follows a 1 week day of a 1 week drop, the next week has a 2.3% average increase. So outside of 2019, this is the best year since 1983. So even though we are seeing massive amounts of volatility now, everybody seems to be buying the dip and reinvesting and reinvesting and reinvesting. So you got to ask yourself, why are these traders playing these crazy games? And why are we seeing such crazy volatility in the S&P 500? Why does one man have all this power when simply all he has to do is put something out on the internet? Now, that's all because volatility remains a trader's best opportunity. So we're seeing traders really get into the stock market games. Now, the S&P 500 is closing in red because Trump knocks on China once again, because the Trump tariff trade, the taco trade, Trump's coming at China, all of it, whatever you want to use, that back and forth has been going on for quite some time. And now with that back and forth, right, we are seeing some sketchiness, to say the very least. People are not quite sure where this is going to go. And with all of this, we're really looking at how Donald Trump and his economics are really going to shape the market here going forward. So, when we're looking at this, why is everybody looking at the new debasement trade? As you guys know, when I went over this yesterday, if you didn't tune in, you should check it out and hit that subscribe button so you don't miss a live stream. Everybody's looking at that debasement trade. We are seeing gold, silver, some of the most inflows in the precious metals that we've ever seen before. And these valuations are going up. In fact, we have gold absolutely smashing the S&P 500 year to date, because gold and everybody is looking at the amount of inflation going into the market. So they're wondering, hey, with the amount that we are sitting at right now and inflation nearly at 3%, we've never cut interest rates when inflation has been this high, at least not since recent memory. And every single time that this has happened, bad things come of it. Inflation gets accelerated. Now, as we continue to truck along with this, we're looking at inflation and it's still staying stagnant. And when you look around the globe and you look at where inflation was for other countries and when they cut interest rates, well, that inflation got worse, to say the very least. So as inflation is still ticking up, everybody's looking for a way out. And this way out is this gold trade. This is why everybody's looking at this quote unquote taco trade. And it's not just the United States who is having some issues. The Bank of Japan, who is the United States' biggest ally, is looking at something of a huge decline, right? So these assets have declined $148 billion in Q3 of 2025, and it's lowest since mid of 2022. So it's this largest It's its largest quarterly decline since it began loading up in 2022. And the Bank of Japan is looking at this as all of some issues. But as as this guy Spencer on X is saying, banks are always the first to fall. So we're seeing the Bank of Japan coincidentally fall. And then we're seeing Goldman Sachs and JP Morgan having terrible days here, falling pretty significantly to start off the day. So it makes you wonder, why are these banks falling and why are they falling right now? Well, banks usually lead and start to fall in recessionary times. But I am under the theory that we are in a major asset bubble. Yes, that is right, folks, an asset bubble. And let me explain why. Because if you take a step back and you look at the global M2 money supply, that keeps on going up. And we are going to cut interest rates. In fact, if you look at the CME group right now, well, in 14 days and 17 hours and 43 minutes and about 5 seconds, there's a 97.3% chance that we cut interest rates. And that keeps on going up. I mean, if you look at the day by day, oh, well, yesterday we were at 98.3. So I lied. We went down a percent. But either way, a week ago we were at 95%. We're basically staying around that absolute certainty that we are going to cut interest rates by just 25 basis points. And that's where I think it's interesting because we do have the Dixie down a little bit today, but we're still floating at that 99 mark, which is a lot higher than it was previously. I mean, if you guys know, friends of the program who keep tuning in, I've been tracking this for some time, and we've been looking at the overall market, and the Dixie has always shown some weakness. Now, we're seeing some strength kind of revive back, even though we're seeing the worst start to the dollar since 1973, or the worst year to the dollar. And then the S&P 500 is basically floating at all-time highs. So if we have a dollar that is extremely weak, we have banks starting to fall, we have people flooding into gold because of the potential of weakness, then why is the S&P 500 floating at all-time highs? That's because we are looking at a major asset bubble. And I think that's majorly in part to AI and others. But I think it's very interesting when you sit back and look at the bull market the S&P 500 is going into, right? Because it's looked at the current bull run as starting on October 12th, 2022, has surged 85%. The 13 prior bull markets completed, it was total gain of 88%. So we're still not even to the most historical bull run, but we're getting close. And since 1950, the 7 bull markets have reached their 4th year, delivering an average S&P 500 of 12.8%. Excuse me. The strongest 4-year performance came 57 and 72. Now, AI is looking to fuel another miraculous 4-year gain. And it's not just the S&P 500 that's facing massive amounts of volatility. No, no, no. You guys all know, for those of you who came into the show yesterday, we saw the amount of silver absolutely going parabolic. And you don't see these kind of charts in a healthy market, to say the very least, folks. You see these charts come through when it's dire emergency times, when there's something that is very negative going on. And that's what I believe we're seeing right now, is the market is running a little bit scared. A market is, in fact, looking at how the wipeouts happen so dramatically and so quickly that everybody gets a little nervous, right? Everybody looks at, hey, the S&P 500, why are you wiping out so quickly with just one simple tweet? Really makes you think. Now, on top of this silver borrowing, right, we've seen gold officially posting its highest monthly RSI reading in history, right? So these things just happen, and everybody's like, oh, hey, Jamie Dimon saying it's a semi-rational thing to hold gold in your portfolio. You think? I mean, at this point, everybody is saying the quiet parts out loud, and nobody wants to fully admit that the overall economy is not in a great spot. So that's why you have me here at Macro Insights. So make sure you guys are hitting that subscribe button. But I'm going to be following this all very closely. So make sure you guys are hitting that like for me, hitting that subscribe button, telling a friend to tell a friend. And I'm going to keep this one short and sweet.